Grab, Southeast Asia's super app success story. In the humid streets of Kuala Lumpur in 2012, a Harvard Business School graduate named Anthony Tan was grappling with a problem that plagued every Southeast Asian city: getting a safe, reliable taxi ride. Traditional taxis were unreliable, drivers often refused short trips, and safety was a constant concern, especially for women traveling alone. What started as Tan's Harvard Business School case study about improving taxi services in Malaysia would evolve into something far more ambitious. Together with his Harvard classmate Ling, Anthony founded MyTeksi in June 2012, initially focusing on connecting passengers with traditional taxi drivers through a mobile app. The company launched with just 20 taxi drivers in Malaysia, but the founders had a vision that extended far beyond fixing taxi inefficiencies. They envisioned creating the ultimate super app for Southeast Asia, a digital ecosystem that would serve every transportation and lifestyle need of the region's 650 million people. Within months of launch, MyTeksi was processing over 1,000 bookings daily, proving that Southeast Asian consumers were hungry for digital solutions to everyday problems. By early 2013, the company had expanded to Thailand and the Philippines, setting the stage for what would become one of the most remarkable expansion stories in startup history. The transformation from MyTeksi to Grab in 2014 marked the beginning of aggressive regional expansion and fierce competition with global giant Uber. Grab's localization strategy proved superior to Uber's global standardization approach, as the company adapted to each market's unique characteristics, accepting cash payments when credit cards were scarce, supporting local languages, and understanding cultural nuances that international competitors missed. In Indonesia, Grab partnered with local taxi companies rather than disrupting them entirely, while in Thailand they worked closely with motorcycle taxi drivers, who were essential to navigating Bangkok's notorious traffic. By 2015, Grab was operating in 6 countries and had completed over 100 million rides, but the real battle was just beginning. Uber had entered Southeast Asian markets with significant funding and aggressive pricing strategies, leading to a brutal 2-year war for market dominance. Grab burned through hundreds of millions in venture capital funding, offering steep discounts and driver incentives to capture market share. The competition intensified when Chinese ride-hailing giant Didi invested $100 million in Grab in 2016, providing not just capital but also strategic expertise in fighting well-funded international competitors. This partnership proved crucial as Grab refined its technology platform and expanded its driver network to over 500,000 drivers across Southeast Asia by 2017. The pivotal moment came in March 2018, when Grab achieved what many considered impossible, acquiring Uber's Southeast Asian operations in exchange for a 27.5% stake in Grab. This $700 million deal eliminated Grab's primary competitor and established the company as the dominant ride-hailing platform across the region. The acquisition brought Uber's driver network, technology assets, and market share under Grab's control, instantly making it the largest ride-hailing company in Southeast Asia with operations in 8 countries. However, regulatory challenges emerged immediately, with Singapore's Competition and Consumer Commission fining both companies $13 million for not seeking approval before the merger. Despite regulatory scrutiny, the acquisition accelerated Grab's transformation from a pure ride-hailing service into a comprehensive super app. By late 2018, Grab was processing over 2 billion rides annually and had expanded beyond transportation into food delivery, digital payments, and financial services. The company's gross merchandise value exceeded $6 billion, demonstrating the massive scale of its operations across diverse Southeast Asian markets, from urban centers like Singapore to emerging cities in Vietnam and Myanmar. Grab's evolution into a super app accelerated dramatically between 2018 and 2020 as the company launched GrabFood, GrabPay, GrabExpress, and numerous other services designed to capture every aspect of consumers' digital lives. GrabFood became the largest food delivery service in Southeast Asia within 2 years, partnering with over 200,000 restaurants and cloud kitchens across the region. The COVID-19 pandemic paradoxically accelerated Grab's diversification strategy as lockdowns decimated ride-hailing revenue but exploded demand for food delivery and digital payment services.
During 2020, food delivery orders increased by 70%, while ride-hailing trips declined by 40%, validating Grab's super app strategy as a hedge against single-service vulnerability. GrabPay processed over $6 billion in transactions during 2020, becoming one of Southeast Asia's largest digital wallets and facilitating everything from utility bill payments to online shopping. The company expanded into financial services by launching microlending, insurance products, and investment services, targeting the region's massive unbanked population of over 400 million people. Grab's platform ecosystem grew to include over 9 million drivers and merchant partners, creating Southeast Asia's largest gig economy network. The road to profitability required sophisticated unit economics and operational efficiency improvements that Grab pursued relentlessly between 2019 and 2021. The company implemented dynamic pricing algorithms that optimized driver utilization and reduced wait times, while investing heavily in artificial intelligence and machine learning to predict demand patterns across different cities and time periods.
Grab's technology platform processed over 50 terabytes of data daily, analyzing everything from traffic patterns to weather conditions to optimize routing and pricing decisions. The company achieved adjusted EBITDA profitability in its core mobility business by 2020, demonstrating that the ride-hailing model could generate sustainable profits in Southeast Asian markets, despite lower average incomes compared to Western markets. Grab's take rates varied by service, with ride-hailing generating 20 to 25% commissions, food delivery earning 15-30%, and digital payments monetizing through transaction fees and merchant services. The company's diverse revenue streams provided resilience during economic downturns, with financial services and advertising becoming increasingly important profit centers. By 2021, Grab's annual revenue exceeded $1.6 billion, with gross merchandise value surpassing $16 billion across all services. Grab's fundraising journey reflected both the massive capital requirements of building a super app and investors' confidence in Southeast Asia's digital economy potential. The company raised over $10 billion across multiple funding rounds, with investors including SoftBank, Toyota, Microsoft, and sovereign wealth funds from Singapore and China. SoftBank's Vision Fund led a $2.5 billion Series H round in 2018, providing the capital needed to accelerate super app development and geographic expansion. Toyota invested over $1 billion across multiple rounds, viewing Grab as a strategic partner for mobility innovation and autonomous vehicle deployment in Southeast Asia. The partnership with Toyota extended beyond investment to include vehicle leasing programs for drivers and joint development of electric vehicle infrastructure across the region. Microsoft's strategic investment brought cloud computing infrastructure and artificial intelligence capabilities that enhance Grab's technology platform and data analytics capabilities. The company's pre-IPO valuation reached $16 billion by 2021, making it Southeast Asia's most valuable startup and demonstrating the enormous value creation potential of platform businesses in emerging markets.
The decision to go public through a SPAC merger rather than a traditional IPO reflected both market conditions and Grab's unique position as a high-growth, not yet profitable technology company. In April 2021, Grab announced a merger with Altimeter Growth Corp., a special-purpose acquisition company, in a deal valued at $39.6 billion, making it the largest SPAC transaction in history at that time. The SPAC structure provided greater valuation certainty and faster execution compared to traditional IPO processes, while raising $4.5 billion in additional capital to fund expansion and profitability initiatives. Grab became the first Southeast Asian company to list on NASDAQ, trading under the ticker symbol GRAB starting in December 2021. The public listing provided liquidity for early investors and employees while giving Grab access to public capital markets for future growth financing. However, the stock faced immediate challenges as public market investors questioned the path to profitability and the sustainability of the super app business model in competitive Southeast Asian markets. Despite post-IPO volatility, going public established Grab as the flagship technology company representing Southeast Asia's digital transformation and economic potential. Grab's competitive advantages stemmed from deep localization, network effects, and first-mover advantages that created substantial barriers to entry across Southeast Asian markets. The company's driver network of over 5 million partners created supply-side advantages that were difficult for competitors to replicate, especially in smaller cities where driver density determines service quality and wait times. Grab's consumer app achieved over 190 million downloads, creating demand-side network effects that attracted more drivers and merchants to the platform. The company's brand recognition reached over 95% in core markets like Singapore, Malaysia, and Thailand, providing customer acquisition advantages and pricing power that newer competitors struggled to match. Grab's regulatory relationships across 8 countries created compliance expertise and government partnerships that would take competitors years to develop. The company worked closely with regulators to establish ride hailing frameworks, driver licensing requirements, and digital payment regulations that often favored incumbent players. Geographic expansion required understanding local languages, payment preferences, regulatory environments, and cultural nuances that Grab had spent nearly a decade perfecting. The super app ecosystem created cross-selling opportunities and customer lifetime value advantages, as users who engaged with multiple Grab services showed significantly higher retention rates and transaction frequencies. By 2021, Anthony Tan had transformed a simple taxi booking app into Southeast Asia's most comprehensive digital platform, fundamentally changing how 650 million people access transportation, food, payments, and financial services. Grab's success validated the super app model for emerging markets, where consumers preferred integrated platforms over specialized apps due to smartphone storage limitations and data cost considerations. The company employed over 8,000 people directly while supporting livelihoods for millions of drivers, delivery partners, and merchants across its platform ecosystem. Grab's impact extended beyond commercial success to social transformation, providing income opportunities for underemployed populations, improving transportation access in underserved areas, and accelerating financial inclusion through digital payment adoption. The company's environmental initiatives included electric vehicle programs, carbon offset projects, and sustainable packaging requirements for food delivery, addressing growing concerns about the environmental impact of on-demand services. Grab Academy trained over 2 million drivers and merchants in digital skills, safety protocols, and customer service, contributing to workforce development across Southeast Asia. As the company matured from startup to public corporation, Grab faced new challenges, including regulatory scrutiny, profitability pressure, and competition from local startups and global technology giants, eyeing Southeast Asia's massive market opportunity. However, Anthony Tan's vision of building Southeast Asia's everyday super app had largely been realized, creating a technology platform that generated over $16 billion in annual gross merchandise value, while serving millions of consumers across one of the world's fastest growing economic regions.